Good morning, Steve Reed in Chicago with the morning grain comments. Have a mixed trade with beans down about 8 cents. Both soybean oil and meal lower. Corn's down 2 while wheat's up 3 cents. Outside markets, stocks are lower. The dollar's a little bit lower, and crude's down another dollar and back to $82 a barrel. I think that when we look at the ouster of the U.S. House Speaker, some people think that that could increase the chances or almost guarantee that on November 17th, the government shuts down. Some people think that the shutdown may last longer than normal, which could be bearish to the dollar and bullish interest rates. The fact the Fed talked about higher rates longer continues to potentially offer resistance to the stocks and some commodities. China will be back from holiday tomorrow. We'll see if they come in and start buying raw materials, but the gold and copper markets are all lower because of concern of their economy. World vegetable oil markets are lower as there is concern about both India and China import demand. We also note that from a weather standpoint, parts of central and northern Brazil is dry, western Argentina is dry, western Australia is dry, and parts of Russia and Ukraine is dry. Now, the only changes in those weather patterns is the fact that we might see some showers late in the second week in parts of Russia and Ukraine. We're watching pretty closely the Brazil situation with too much rain in the south and not enough in the central north. So we'll see if that pattern might change a little bit. Maps are struggling with the long-term Brazil forecast. Here in the United States, mostly drier than normal conditions in the month of October could offer some concern about the hard wet winter wheat planting conditions, but should speed up harvest. And so far, what we're hearing is the bean yield might be a little bit better than farmers expected, while corn is unchanged from last year. Farmers continue to be a slow seller of corn, but are seller of beans. So we've got beans down to the 1260 support area. Breaking that out would probably trigger more long liquidation, just like trading below 360 in the meal. Corn market still holding above the 480 area in the December with quite a bit of a carry, as much as 15, 16 cents between decent March, which suggests that farmers should hold their grain on the carry. The funds still love the fact that they're short corn and can roll up to a higher price on the March. You can say the same thing about wheat with this March wheat now at almost 30 cents, and so that's quite a bit of money for them to roll that 100,000 contract short up to the March contract. So we'll be watching pretty closely what China does. We'll be watching pretty closely from a global weather standpoint, impact especially on wheat crops, and then we'll be watching once the harvest is done for corn and beans in the U.S., is there a bounce in the market?